Everyone. Thanks for joining this session uh, on the late Sunday. So I'll be going through quickly the futures now that they are open now, and overall some major features of the entire market, and also some crypto futures and how they are doing. So let's get started. Let me start sharing my screen. Can you see my screen, Kishore?
Yes, Uday. Yeah, we can.
So, Kishore, this can be pure technical, right? Like, or do we need any introduction or something like that? Or
No, this can be pure technical. Yeah.
pure technical? Okay, so let's get started with S&P futures and how they're doing it. You know, we had very difficult couple of last 2 weeks. And what you're seeing here, this chart setup is on the left side. You are seeing that there is a weekly chart, and on the right side is a daily chart. So I'm a swing trader, and I would like to see both weekly and daily charts in perspective and see what exactly is going. Okay, and also I would like to use moving averages a lot. So what you're looking here is the blue stuff that you're looking at is a Bollinger Band. The dotted line that you see in the middle is a 20 days average or 20 period average, okay? Because when you are on daily, it represents 20 days. When you are weekly, it represents 20 weeks, okay? And the upper and lower lines represent 2 standard deviations from it. So that's the Bollinger Band, and we have a couple of moving averages here. The gray line is 5, yellow line is 8, and we have pink as 50 days, 100 days, 150 days, and 200 days. Okay, so these moving averages and the direction in which they are pointing to, are they pointing upward or they pointing downward, and is the price above the moving average or is the price below the moving average, will give us a lot of clue on how exactly is the market doing and what is the direction of the market. When we look at those average lines and their directions on the daily, it gives you how it is looking on a daily basis. And when we go and look at it on a weekly basis, we'll be seeing the major direction, primary direction of the market overall. Okay. So with that, some basics on what exactly you're looking at. What we are looking here is S&P as such pulled all the way back, almost 38.2 retracements, and it pulled back all the way to 50 period average. So on Thursday, I think this is on this is Friday, Thursday, and Wednesday. So Wednesday we had a very big drop and it lost the 50 days average, and on Thursday, almost like half of the candle bounced back. Okay. So which means these kind of volatilities are pretty common, especially when the market is moving downwards. So whatever the bearishness that was there on Wednesday, half of it was covered here, and the volume is decent. But then the next day comes, and they completely take it back. Okay, and they even try to go below that previous level also. That's not a good sign. If the market was stronger, it should have actually made a higher low, but it did not do that. Okay, but what was good about Friday was at least it tried to kind of move up a lot and close above that. So that is very constructive. You see that long thin line that you see, which means the price went all the way down, but it kind of came and closed at this level. So what is happening right now? What I'm looking for primarily is I would like to go and see the weekly chart on whether there is a very major concern or not. Okay, so on weekly, last week it tested the 20 weeks average. 20 weeks average is roughly half a year. So you're looking at around 6 months time frame or 5 months time frame. So it's trying to kind of hold to that average time. Okay, and let's go and see the history, how exactly it reacted when it touched it last time. Okay, so this is the one, it just touched it, it tries to kind of move down, it could not, it tried to move down here, it could not, it went back and closed above it. Here also it closed above it. For 3 weeks it was struggling around that, and then it completely moved above that, and then it started the further rally. So in the same way, we would like to see that every attempt to make it go lower then this average has to be bought by the bulls, and then kind of it comes and closes up. So as long as we are seeing that, which means there is not much big concern overall uh, on that, the major pullback is coming. But once it goes below that, then that's a very, very bad direction for the market. And what concerns me more is the volume that happened on last week. So it's very significant. So it's good that the futures opened and we are up 20 points, which is nothing in the context like 0.46%. But it's good that we are staying above the 50 days average. And then slowly, what I would like to see is it starts moving higher. How do you know that the market has hit a bottom, and how would you know that there is some strength, there is some bullishness that we could play? So as of now, there is no clue, there is no clear direction as such whether it is bullish or bearish. Okay, because what is happening here, it is below the 5 days average, right? Which means nobody is willing to pay a price more than the last 5 days average, which is not that bullish. So it has to move above that. So you would like to see some buyers willing to pay more than the last 5 days average. Okay, and the yellow line is the 8-period average. So the bullish case, how would you confirm that is we would want you to see this bar as we open tomorrow and go a little bit more green like that, and if possible grow completely like that. Okay, so that will be very, very constructive. So if you see that kind of bar and close above these two, that means we are back to bullishness. We are looking at around what 45 87-ish. So what happens on the weekly when we go to 47 87-ish is we will be making that weekly bar look like that. Okay, so not only does the daily 5 and 8 are gained, weekly 5 and 8 are also kind of gained. Okay, so that is the ultimate signal for you to play bullish trades. Okay, but that's a bullish scenario, right? What could happen most likely is it will try to come back. It will try to come back here like this. Okay. So in the best interest of our easiness, what I'll do is I'll take a screenshot of it and then I'll draw the arrows on top of that one, okay? So let's do that. So what could happen here, it tries to come back here, which is good, all looks good. And then everybody kind of, they start buying the dip, saying that, oh, the dip is in place, but then it kind of pulls back again to the 20 average like that. And then it does a lot of drama, again goes up like that. So we're talking about weekly, right? So it can take almost next 1 week or 2 weeks to kind of digest this move above this average. So it can do a lot of drama like that. On a daily also, it can go up like that and then completely give up, okay? And come back to 50 days average. And it can start going up like that again, all the way to the downward pointing. So that is possible, that is constructive, but even after moving there, it can start come back down also, okay? So because that is a resistance. So that's what we'll be looking at. But the worst case scenario is not this one. The worst case scenario is if it loses this 50 days average and continue to go lower and lower, okay? So that's the worst case scenario, and it is quite possible that it can happen. Okay, so what we are looking at here is, in that case, how is your portfolio looking like? Will you be able to withstand that down move? Or in the bounce on Thursday, you have already kind of took all the money in your account and already invested in it. So that's kind of very tricky situation, right? You don't have any more money left. You're already in loss because, it kind of moved down. Sorry, it kind of moved down quite a bit, and then you, whatever money left in your account, you already kind of uh, bought the dip, and there is not much account money left for this one. So, what I would want you to see is, hopefully this cloud acts as a support. We are looking at a daily chart, and but what I don't want to see is it moving below the cloud. Okay, so for example here, the cloud was supposed to act as support, but it went all the way down the cloud. It was in the cloud for some days and tried to gain back it, but then it lost it like that, right? This is all noise that's happening. So similar kind of thing could happen with the market also. So I would want to see the market starting to gain at least one average at a time and stay above that for a couple of days. And if that is happening, then we would get to play, like I would like to see at least it moving above these 5 and 8. Then the safest bets that you can do is play for an upside move from here to here. Okay, so that would be safe. And then if it goes above that, then you can play for further upside move from here to all the way here. Okay, so but these two will not happen until this green happens, right? So you have to be careful of that. And I would recommend everyone to be patient until that happens. After that happens, you can have these safe moves, safe move, first move and second move. But if you kind of go aggressively here and it doesn't go up, and instead it starts kind of moving down like this here, this week, and then probably next week it moves down to the 150 average, and even it could, no one is stopping it, because when the levels are done, do quickly visit that move also. Okay, so I don't want you to be kind of trapped with all your money in the market and this kind of down move happens. You have to be very careful about that. So let's go and see quickly if I can load it. How much percentage move was market is has been doing last couple of days, right? So if you can see, on Thursday it was close to 2.5% down on this day, on Thursday, on this day, and then we saw close to 1.5% down. So the bounce that is happening here, so one big down day followed by one big up day, right? So everybody gets crazy here, and they kind of buy calls, and seeing that it's the bottom. But what happened the next day? It completely got sold off. 2 consecutive days got sold off, and you'll see one day bounce, and the next day almost a lot of it got sold off, right? So this kind of volatility is pretty common, and if the market players, the big players, really want to take the market down more before they continue a big rally upward, or the Christmas rally, this next week could be, or this week, the upcoming week could be one of the weeks where the bears have at least some control to kind of take it down. So I don't want you to get trapped on that. So be careful about that. And when we compare to the kind of move that happened here, right? Whatever the length of the move, when we go and look at the similar kind of move. So how can we get the similar kind of move? What we could do is we can go and take that, connect those two lines, right? And draw a parallel channel. So when we draw that parallel channel and give it a different color, say yellow, maybe. Yeah, and probably make it thick enough. so that you can see. So this yellow channel says whatever down move happened here, and then some bounce drama, and then further down move, right? So if this similar kind of thing happens now also, this is a down move and some drama is happening, probably you'll see this screen and this screen, and then further it pulled back. So we are looking at around 44,443 area as a support if it represents similar kind of move, right? And yeah, so with that as the channel, and we are looking at at least the cloud below the cloud breakout on daily, and how would it be on weekly? On weekly, it would, yeah, it would go below that 20-bit average. So not to go much into technical, what I want you to be aware of it is no one really knows in which direction the market goes from here. And if you can see this move, it's close to half of the move, actually below half of the move. And if you want to go lower, no one is kind of, I mean, a lot of people will be interested to see it go lower so that they can buy the dip and gain a lot of percentage into the new year. So be cautious about that. That's ES futures. And when we go to Nasdaq, this is a little bit better when you compare with ES, but again, it also retraced to the 50-period average, but unlike ES, it is not closing a lot below that, okay? So Nasdaq is tech stocks, and we are looking at weekly chart also. Similar kind of setup, about 20-period average, which is like, still bullish area only, but below the 5 and 8, which is kind of neutral area, okay? So it is sandwiched between that. It can oscillate here for more weeks to come and then make a decision in which direction it goes up. So the good thing about it is we would like to see it stay above this September levels, okay? So what it makes is when we kind of have above September, there we had a very good October month, and then November month is kind of red, but December month we want to see it above, going above September month, okay? So that keeps the constructiveness in place. Very high sell volume and increasing selling volume, okay? So if the market wants to puke here, and looks like Nasdaq also joined last week to participate in that down move, okay? The worst of all the markets is Russell or small cap. The small caps completely moved down below the cloud. It lost 50, it lost 200 days average, everything below, right? On weekly, what happened was there was this big range. It was actually staying in this range very happily without going anywhere for the last almost like 8 months, 9 months. But then you see that fake breakout, and a lot of people on that week were thinking that this breakout in small cap is very, very good, and it will continue going higher, taking the market even further higher. But what happened there is it did that fake breakout and pulled back into the channel and now testing the lows, okay? The only hope I have is this is a well-established support level, as you could see, and it is also the cloud top. So I think the support holds, and there can be very, very big candles out here. So we'll be looking at a big upward candle and probably a downward candle again like that, and some more drama here, okay? So nothing is out of woods. This is the worst performing sector, and it might stay like that into the year end because no one wants to go and aggressively buy small caps, which comes with a lot of risk, right? And risk their portfolio or the percentage profit that they got. If a fund manager already has 50% profit, why would he go and put in a high risk small caps and reduce that 50% profit, yearly profit to 25%, right? If it further goes down. So that is the reason why small caps typically have not so great moves, not so bullish moves into the year end, okay? But as soon as the new year starts, every fund has entire 12 months in their disposal. So they want to take the risk early on and gain as much percentage as possible in profit. And if somehow they lose a lot, they can still have 11 more months or 10 more months to kind of cover those losses and show a good thing. So to into the year end, risk is off. They would like to go to large cap tech stocks. So the Nasdaq might stay afloat and it might be stronger when compared to small cap Russell. So if you are owning small caps and the risky stocks, then you have to be a little bit careful. Large cap stocks might do good, fine. A quick look at Dow Jones and how it is doing. It's also below the 200. It touched below 200 days average and trying to kind of recover a little bit, but nothing to say here. Weekly is bearish and daily is bearish. So the only sector that is showing some strength is Nasdaq. So you better stick to those stocks as of now. Okay. Um, some large cap stocks like Apple and all also will be a good area, and what a lot of fund managers might be using this as safe ATM machine kind of place where they are staging their money temporarily, because Apple is kind of a stable company. It may not go down very quickly, but yeah, and because there is a lot of uncertainties, these kind of stocks might show some relative strength. But if the market starts going down further, um, and the one level after level, other all the levels are broken down, then even these strong stocks like Apple or Microsoft, they'll also try to kind of give up and follow the market to the downward side. Okay. Nvidia also looking like that. If you can see, it is below the 20 period average, and there's a lot of gap for it to cover. If it wants to become bearish and follow the market to the downside, it can lose up a lot of value there very quickly because of that. It's a high momentum stock, right? So you have to be careful about that. And a quick look at VIX. The VIX has been very, very hoppy hot last week, especially last couple of weeks, I would say. It has been in a very long-term, consistent downtrend after that March spike, March 2020 spike. But slowly it was fading down. But recently it started spiking up. The one that was pointing downward and downward, now if you can see, it's actually pointing upward and upward. So it feels very spiky. Anything above 20 is a reason for concern. Would want that to kind of come below 20, and as soon as that comes below 20, you can also take it as a signal that the market is ready for a slow grind higher again. Okay, so that is typically what happens. So what I want you to be focusing on more is to see how it behaves around these levels. And I don't want the market to spend too much time below that 50 days average. I want it to kind of regain it and start moving higher. But yeah, so the longer it stays below that levels, the more chance of it for it to go down. Okay, so you want it to be following this path more, these two green candles, and then probably a red candle is fine after that. But you don't want to see this red candle right away this week. Okay, so be cautious about that. I don't want. This is kind of very not so good signal. Let's quickly look at Bitcoin. So if you see, sometimes even before last March also, right? Bitcoin was kind of a precursor to what market was doing. So if you can see, the current market, if you see, is in this kind of area where it is above cloud, above 50 days average, and then the Bitcoin is kind of going down and down further. So I think that was a 10% down move. That's kind of horrible, right? So yeah, so if you see that kind of move in Bitcoin, there must have been a reason for that to happen. If the market follows that direction, then you can see that market stays upward for a few more days and then pukes. Okay, whenever that happens, that's going to be very ugly. Okay, so this is not such a great. It actually pulled back all the way to 200 days average, and staying above it becomes very critical. And it's been quite some time that it did not touch 200 days. It was last time it touched was in September. And so, yeah, if it touches there and goes there 1, 2, 3, 4, 5, 6, 7 days, around 1 week or 1.5 week, 2 weeks, it can stay around that before it does the price discovery, right? But on weekly, it pulled back all the way to 50 weeks average, which means last 1 year's average range. Hopefully that holds that 47160, and then it start bouncing back higher. There is a lot of buying pressure. There is a lot of interest in Bitcoin. So I think there will be buyers overall whenever there is this kind of pullback. So I am in a slow accumulation mode in Bitcoin. So whenever there is a pullback like this, I'll just add a few to my things. I'm not trading actively the Bitcoin, but I'm trading more Ethereum. But yeah, it's not good that it broke this channel support. And typically, whenever that happens, the move or the target price is going to be twice that channel height. So when we go and try to get that. Okay, so if we consider that as channel, and we might be looking, that's a worst case scenario. It can go all the way to 35,000 also. Yeah, so I mean, I don't want you to go and start buying it right away, but maybe one here, if your entire intent is, to kind of get 5 Bitcoins, maybe one here, and one here, those kind of things will be better. So what typically is happening here, and what I would like to see it do is, this is a very healthy consolidation, I would say. So we had a nice cup, right? And whoever kind of bought it at those highs towards the beginning of the year, they endured a lot of pain, right? From 65,000, it went to 28,000. So they have gone through a lot of panic. And when it comes back to that level, logically, people who have suffered through all this pain would like to kind of come out at break even. Okay, that's what it's happened probably for few weeks there, and then now it's pulling back a little bit. And if there is a real strength in Bitcoin and there is a buying pressure, what happens typically is slowly it forms this handle and turn out like that. So this cup handle formation is very constructive, and it's very common also. So it will exhaust all the sellers who are ready to sell, and when the buyers really want to come in, there are not many sellers left. So what you would see is, you would see that price quickly starts to kind of move, and by the time it comes to this level the third time, so then there are not as many sellers. So whoever bought it here and whoever kind of were holding all this period, they want to see higher prices, and you'll see that kind of move that happens. Typically, whatever the height of this cup, you'll see half of that height go from here. So this is a very constructive formation. I do not think it will come all the way down back here again. As long as it is making a higher low and moving along, this is okay. And with this as Bitcoin, Ethereum is doing a lot better in that context. Let's go and see quickly that. So as you could see, it already did that cup handle formation, broke out and staying above that levels, which means, there are enough buyers to support that level. So as long as it is supported by that, I think we should be good. So let's go and quickly look at this chart. Yeah, it's staying above 50 days average, and as long as it continues doing that, then we should be good, comfortably holding it, and it's also above the cloud. So yeah, it's only 1.5% down compared to Bitcoin of 8% down, right? So that shows, that speaks volume. So with that in mind, I would want you to be cautious, and I want to keep a close look at the market on as it does the price discovery. I'm always a fan of, not a bottom fishing or bottom buyer. I want the market to show me the strength, and I'm okay to kind of give it as much time as it needs to do that price discovery. And I don't want to kind of go in its way and catch the perfect bottom, right? I want it to prove to myself by gaining this 5 days average and closing above it for on a day or two, and gaining this 8 days average and close it above for a couple of days before I start putting any bullish trades. And that is my recommendation. I would recommend you to do that too, to avoid any wreckage to your account. I know a lot of you would have made a very decent profit, and some of you might have already lost all that profit already. So um, yeah, that's my take on the market and patient mode. And this week is going to be critical both for bulls and bears. If bears are strong, this is the best chance that they have to take it down. If not, I think bulls will win, and they'll continue taking it slow, grind higher. Hope that was helpful. Kishore, anything to add here?
Maybe I will give opportunity for members to ask few questions.
Sure.
Yeah, and then hey Chaitanya.
Hey, thanks for holding this session. This was really helpful. I just have a quick question on sector rotation. So we have seen Nasdaq coming down. So a lot of high growth and tech stocks getting hampered. Where do you see the money going into? We have seen a lot of money flow into bonds, but are there any other sectors in stock that you think that this money would get into?
Yeah, typically into the year end, a lot of people would like to take less risk. So large cap is where the money flows into. If it is not pleasant the next couple of weeks, if it's kind of very tough week, uh, they'll struggle to kind of find where to put all that money. And bonds obviously will be a good place to kind of go and see those breaking out to new highs there. And that's kind of very common reaction. It depends on whether this is something to do with East US or is it global, right? So if it is with US, then they might push it into some kind of developing countries. If it is kind of global in nature, the global recession or something like that, then they don't have anywhere to put. They rather keep it in the US itself. Yeah, I mean, nothing. It's not looking that bad yet because it's still above the weekly average, weekly middle Bollinger Band, and it's actually, even if you go back and look at this, let me actually bring that. So another metric that I typically follow is I would go. I mean, if you want to kind of make it simple and kind of a rule of thumb, I would rather prefer to do it on a monthly basis, right? When you go to monthly chart and go to /is. So what you're looking at is it is above the 5 months average, okay? So which means nothing happened yet. So above 5 months is pretty common, and it's bullish only when it kind of moves below 5 months and 8 months. That's where you see panic happening, but I don't see anything there. So probably it was another dip, buy the dip opportunity and a pullback so that it can continue for the year-end rally. So I hope so, but before I assume anything, I want the price to prove it. Large cap will be good into the year end, and through the year end also a lot of stocks typically rally a lot. especially the farther the pullback happens, the more rally you will see into the year end, into January and February. You'll see some small caps being bought. I think this pullback in small caps is very, very constructive. And this gives an opportunity for those deep buyers to kind of buy towards the end of the year and rally it further into new year. So if you go and look at what happened in 2020, as you could see, after the year started, you'll see this big spike and then goes nothing, consolidation, right? So if that repeats, I think you probably should be seeing a deep buying happening here, and then it rallies into the year end completely like that. Okay, so nothing as such is concerning, at least from the S&P and Nasdaq perspective there.
Got it. And just a quick follow-up question: with the rates supposed to increase next year, like 3 or 4 times, do you think financials might have a good chance to rally?
It depends on a lot of parameters. It's not just one thing, right? It's the strength of the US dollars, the strength of the bond market, and globally how it is doing. So a lot of variables there come into picture with financials perspective. And everybody thinks that, you know, most of, like if you see the small caps, I think all the not major banks, like regional banks and all, are part of this thing. So I think they would have been beaten pretty hard. With interest rates rising, anything that could happen, it would not have that much major impact. And whatever the price that gets adjusted in the anticipation of the interest rate hike, for example, on a quarterly basis, whenever the review happened, probably the price gets adjusted a few weeks before that event itself. And then if the outcome of that meeting is in alignment with that, no price moves happens because it's already adjusted. But if it's more negative, then the price falls, right? So I think market and financial companies, banks also will be, the price will be adjusted in a forward-looking basis, and any good news about to come will be baked in before a few weeks also. So if you are interested in playing banks, you have to be at least thinking, you know, 3 or 4 weeks ahead, and depending on how they are doing, if they are at a major support, then yeah, on a monthly, it's just following the market as of now. But yeah, if they're major support, you should be like, you know, buy the rumor or sell the news perspective. So you should be ahead of the game in playing these things.
Okay, thank you.
Sure.
Thank you. And a lot of members are asking questions about individual stocks or individual altcoins, like what is ETC, LTC, right? We cannot go about each one. So if you have any generic questions on the overall, right, on the indexes or something, please go with those. But yeah, because if we start discussing about individual stocks, it will take hours together, and we cannot give opportunity to one and we cannot deny others.
Yeah, I on that note, okay, sure. What I would like to add is, and personally, what I would prefer is when the market is shaky, right, and when it's kind of doing this kind of behavior, losing the 50 days average, or at least below the 20 days average, as soon as it happens, I would not go and trust any individual stocks. What happens is those individual stocks will give up. Most of the stocks will follow the market downward, and any stocks that are already beaten up, those will be the first to be sold. The weaker stocks get sold, and the stronger stocks would like to hang out for some time. But whenever the big players who are holding those stronger stocks higher throw in the towel, okay, the market is going down, I don't want to anymore to keep that, they also will move quite a bit. So personally, I would recommend you guys, if you have the flexibility in your portfolio, as long as it is staying this 5 and 8 averages, ride that wave happily, okay? And you can play as many stocks as you want. But whenever you see this kind of losing of 20 days average, you better reduce the number of stocks that you're playing rather than focusing on individual stocks. You come to the index and you just probably focus on playing the SPY or QQQ, those kind of things, so that you are very focused. You're not adding a lot of risk, headline risk especially. Like if you were in docu, this is what happened, right? If you were in Zoom, this is what happened. So yeah, you never know what headline risk comes to a specific stock. So I would rather move to the broader index itself, which will be less painful. And once the index turns the boat around and starts coming into this kind of upward move direction, then you can switch back to the individual stock. So that is some recommendation that I would give. You have to be very focused on selective stocks only and not thinly distributed across a lot of stocks, because when the market starts falling, you never know how much loss is going to come in a respective stock, and what kind of news will impact that, and you probably will give up managing any of those stocks. You don't know whether to kind of sell at a loss, or you don't know whether to buy the dip or add more thing. So there will be a lot of confusion. So as soon as this kind of ramp up happens and it starts moving sideways, this is the time. This is the window where if you had 100 stocks of a specific thing, you should have reduced to 50 stocks and slowly come into cash, like reserve mode. And then this is not a pullbacks, like this should not be a good time to add. But but when it comes to major support like 50 days or 100 days or 200 days, then you can deploy all the money that you kind of kept aside here at these low levels, so that you have more probability of making money from that dip. Okay. It could go lower, but at least it's worse. It's not as worse as you got stuck into those stocks here. Okay. So focus on the indices when it is very volatile and below critical levels, and then you can go back to the individual stocks once it turns around and gets a direction. Any other question?
Yeah. Hey, Mr. Jeevan Domaraju.
Yeah, hi Kishore. Hi Sri. What are the factors why we are seeing bearish market right now, Sri? Other than this new variant, so anything else is triggering all this bearish sentiment right now? I know capital gains, something else happening right by next year.
Yeah.
So people are selling off to pay less taxes this year. I mean the big institutions.
Yeah, that could be one reason. And also most of this is algorithm driven also. So from one level to other level, right? And if there are 100 big players who are all controlling the market, if 50 of them are buying, 50 of them are selling, then it will be this kind of behavior that you see here. But then when that 51st person goes bearish, right? So there is a kind of that inclination towards bearishness, and when it becomes 52, 53% of players kind of want to be bearish and they want to protect the profit that they had for the year. So they will sell first and think later. So those kind of moves cause this big selling. And yeah, any time these kind of critical levels are broken, it takes a lot of effort or guts by some of those big players to buy the dip, and how forcefully they will bounce it, and how much risk that they're taking, and how much they could fight the other bearish group. It determines whether the market is going to bounce or go further down. So lack of buying interest, because I mean from October, whatever rally happened, I think it pulled back 50% of that. So and overall, if you kind of see from this low to this low, it's very mild thing. And if the big players see, okay, the market is still kind of very high, at least I would like to see for it to come back a little bit more, right? So then they can take it down, but no specific reason as such. I would see, they can pick any reason, any news for the sell-off, like the whatever Paul spoke about, tapering and anything, any such thing, they can just use it as a reason to sell off. They do
Or
not.
else we have to consider this as a cycle, it's been 2 years, right, since the major correction in 2020 March. So almost like we can think like this is the next correction, like not that much, at least 10 or 20%.
Yeah, 10%. I think it's very common. I think it's good and healthy also for long term. So as of now, I don't think we have seen how much is the percentage down.
But Sri, like I have a question like related to crypto also. Like most of the people they're hedging on crypto, right? So I know it's very early
5%.
stage. We are in crypto, but why like whenever the stock market is down, automatically the crypto is also down. Like because most of the people they're hedging on Bitcoin, right? Like whenever the market is bearish in stock market.
Yeah.
But right now both are going parallelly. Like when it is down, automatically it's coming down within 1 or 2 days.
Yeah, I mean, what I noticed is crypto will be a precursor to kind of market move. There might be a lot of dependence, a lot of things there. More crypto has been high more than market percentage wise, right? Or whatever the kind of rally that happens. So these kind of corrections, I would not say correction, these kind of pullbacks, like so far we have 5%, and if it is 10%, that will be even better from long-term perspective, which will take it to 150 days average. So those kind of corrections are common. As I mentioned here, it's very common for it to kind of pull back and to form that handle so that it can gain enough momentum to go higher.
Or
Yeah.
else like in crypto we have to consider like the big institutions, right, who missed the train, right, already crypto run. So they want to dump it and they want to load it heavier, like by this dip, like so that they don't want to miss the long run 100k or 150k whatever people are projecting. So
Yeah,
that might be also part of the game, right? Like the big institutions who miss the run, like the low 20 or 25k. So
yeah,
they might think like it's a coordinated effort and they want to load it more now. They might be doubling down whatever investments they have, like we have to consider that also as a scenario here, like
yeah. So that is, it's very common psychology, crowd behavior. Like for example, if you understand that Elliott wave concepts, right? There'll be um, five waves upward. So I see it as if it is what's first wave. This is wave 2, wave 3, and wave 4. Not quite. I should have actually stayed about that. There could be a wave 5 also before a big correction happens. But yeah, that kind of cycles keep happening. And when you mention cycles, I think the best analogy that I could give is those Elliott wave cycles, where there is the impulse wave that's taking it higher, and there will be a correction wave that takes it lower. I'm trying to find the image so that I can quickly show you. Where is that guy? So open image in the tab. Yeah,
but is there any way to predict the cycles, Sri, like when
yeah, so this is the kind of wave where you see that there is going to be 3 waves to the upside, and then there are 2 waves to the downside. And each of this wave 1, 2, as you can see, there is going to be 3 waves inside that and one down wave like that. So these are the cycles that typically happens, and it just could be that for now. Yeah,
sure, Sri, thanks
sure,
for the insight. Yeah,
sure.
it
Thank
helps
you.
a lot. Yeah,
We take just one more question and then hey, Mr. Sunil.
Kishore, thanks for providing nice session, Uday and Sri. So my question is, in the volume, sometimes we always we see either green and red bar in the volume. Is there a way to know like how much bullish or how much bearish is there in that one candle in the volume?
Yeah, there is no bulletproof way of it. You need to kind of try to peek a little bit into the what's happening on your lower time frames. Okay, so for example,
Like today, you see the last candle is red, the
yeah,
volume, but in this last one, how much percentage is buy and how much percentage is sell?
yeah, that's what. So for example, this Friday, there is a lot of volume, right? So you have to only go, probably set the time frame again to custom and go to December 3rd, right? December 3rd, December 3rd probably. And then you have to go to intraday, and probably 15 minutes should be good. And then see how that volume is distributed across. Okay, so what we are looking at is just for the Friday thing, right? We are looking at, you know, a couple of red candles, but whenever the green was happening, it's kind of a lot of volume, and slowly, but towards the end, it is kind of a big green bar that you see. That was a constructiveness that you can count it. I mean, if it is not 15 minutes, you may have to, you can go and actually go to lower time frames also and see last 5 minutes is kind of very constructive. And if you go to 1 minute also, you can see that, you know, this. So that's the only way. Like 1 minute shows it differently a little bit, you know, 3 big bars and then red bars. The thing that you see, the color of it is whatever the bar color is. If it kind of closed red, it marks it as red. Closed green, it marks it as green. You have to remember, each and every transaction there is a buyer and a seller, right? So the fact that, you know, there is a lot of volume, like this much 2 millions got traded, which means there were 2 million buyers and 2 million sellers. There is no way. But sometimes it helps to see it in the context. For example, here, this was a candle and this was a red candle. If it was more bearish, it would have closed below this candle, but it did not, right? So the context of this redness in the context of the previous candle might give you some logic. Was it more buying or selling pressure? Other than that, I don't see anything. You might see some indicators where it shows some red and some green here, but that's not actually representing buyers and sellers. They're just taking, you know, how this candle is closing in the context of the previous candle, either in the bottom 1/4 or half of it or above half of it, and then change the color of it accordingly.
I see. So in a day, like if one red candle is there, which is having, let's say, 1 million volume, but out of that, we cannot say 80% is sell and 20% is buy.
No,
That is,
because the 1 million means there were 1 million buyers and 1 million sellers. Kind of, if you take it that way, right? So there is no way to tell that. Yeah.
I see. And you told that Russell, that small caps are not doing good. And once it start doing good, how we will identify, like, is there an easy way to identify top 10 best stocks in Russell? Like, what is the easy, how to find? Because
Yeah,
data is like 2000 stocks. I want like top 10 only.
yeah, even you can go and look at any of these ETF explorers, like, you know, Yahoo Finance does it. Even Thinkorswim, when you go to Market Watch, and probably is it Visualize, I think, and the indices Russell, and you can go to a index watch, select public Russell indices or Russell things, right? So you'll see a list of stocks there, and what is moving higher, what is moving down. But again, the simple way for you to do is, or I would go about it is, I will go to a website, finance.yahoo.com, like that, and then search for that ETF, IWM, or whatever you want to use, right? And then go to the holdings here.
Okay.
And you should see at the bottom how much it holds, the top holdings here. And I think you should see the performance also of these indices. And yeah, there should be more detailed websites like ETFDB.
But this is the performance of the entire stock. But let's say in these 2000, like Russell is having 2000 stocks. out of 2000, which top 10 are best performing. So I will just focus on those. How
Yeah,
to
you can
easily
sort.
apply.
Yahoo Finance did not show that to us.
Okay.
That's why I'm trying to go to this website, and then probably let's go and see the holdings of it. And assets, maybe you can find some top performance or something like that here. Yeah, you have to find a way to kind of go through that list of values there. So otherwise, if you want to just go to IWM, who is that iShares owner, right? So that's the company. You can go to iShares website and then explore that ETF there. And then probably they should have the performance tracking of the individual thing there. Okay.
Okay. Okay. Sure. So makes sense.
Sure.
Thank you so much. It was helpful.
Thank you.
Yeah, thanks, Uday, for clarifying all the questions of all the members. So yeah, again, right, whatever is the market, we can still make money with puts. We can make money with shorting some of the stocks, even if it is bearish. So yeah, again, if you're interested to be part of any of the premium channels, you can visit any of the bots, or you can go to rightchoiceadvisors.com. So we have experienced team like Uday, Shri, we have KC, MG, right? Even last week we had over 90% success with all the options in this type of market. So yeah, right. Don't get panic by looking at the red. So this is how market behaves. It goes up, comes down, and again it goes up. So if possible, right, whenever, as Uday suggested, whenever we see that reversal, when we see that confirmation, then yeah, that is the best time to add more stocks or get quick profits on them. Fundamentally strong stocks. Right, again, we have all the services, stocks, options, crypto, futures, and also we are going to start another mirroring feature where you don't need to do anything, right? It is more like a passive investment. You will be connected to an end list. If you want to follow all the stocks or options which Uday suggests, you can connect to Uday's system, or you want to follow Sri's, or you want to follow Casey's, or you want to follow MG's. So whatever they take, they will be placed in your accounts. So I'll be doing a webinar on that very soon, maybe by maybe this Thursday, Friday, or maybe next week. We are completing all the infrastructure setup and all those things, so that, right, whether you have to go to office or whether you are busy in meetings, you are not able to enter and exit on time, it will be all those members who are not able to able to enter and exit or make profits as the analysts are making, or as some of the members are making, maybe because of right, inexperience in the trading, or because you are busy with your office and unable to do multitasking with between multiple things. So we are coming up with a solution where your systems will be connected to the endless system, and you don't give any passwords or any credentials, but whatever we execute, that will happen on your systems. So I'll be sharing all those details very soon. We'll be doing a webinar with all the information. But right, yeah. So whatever is the market condition, we can still make money. So without panicking, have patience and take the opportunities. Okay. So thank you, everyone. Thank you, and have a great week. Thank you, Sri and Uday.
Thank you, everyone. Thank you, Kishore.